back to the MD Investor, the channel where we talk personal finance, setting goals, achieving goals, breaking the cycle of generational poverty. Quick video today, guys. As you already know, Amazon has completed its 20-to-1 stock split. Amazon has completed its 20-to-1 stock split. Today, I'm doing a video with early in the morning on June 9th, Thursday. The stock split, it began trading Monday, June 6th on a split adjusted basis. The new stock price, no longer under $2,000 or $3,000, but about $122, something like that. So the question is it too late to buy Amazon? I did a video before that said, should you buy Amazon before the split or after the split? Now this video is going to be the split has occurred. Is it too late to buy? So we'll go through it. It's not going to be too long. If there's people that you think could benefit from this type of content, let them know about the MD Investor. That's MD space Investor on YouTube. So this article is an article I came across on the Motley Fool. So it says here, Amazon stock split is complete. Time to buy the stock. So a couple of points they're gonna come through here on this article. It's gonna be the Amazon stock is cheaper than it's been in a long time. The e-commerce business is facing headwinds, like so many other businesses, but will recover. And Amazon Web Services continues to deliver phenomenal results. Here, Amazon, so the market cap is about $1.25 trillion. Today it's down about $1.82. It's about 1.5%. Current price now is $121, which seems weird, right? When we used to see Amazon $2,000, $2,400, $3,000, and it is too much for a regular person to buy. As we went over the last video, a stock split is basically cosmetic, right? So, with a quick review, it's like having a pie, like a pizza pie, and the whole pie, if they would be one share of Amazon, but it's cost $3,000 a share, or in the case, it was about almost $2,500. All they did was slice up the pie in 20 different pieces, and then you divide the price by 20, and that's why the share price is where it is now, but no new value is created. Okay, Amazon stock looks more compelling than it has in a long time. It's official. Amazon just executed its first stock split since 1999. On Monday, the e-commerce giant gave investors 20 shares for each one they previously held. And consequently, the individual share price plunged, right? So every share of Amazon you had before the split is going to be worth 20 shares. And the price was divided by 20. After years of the stock trading in the $1,000 range, it looks odd to see Amazon shares going for just around $120. And it's true. When I got up on Monday and I looked and I saw Amazon at 120, you're like, wow. But no, it's not freaky. Your account didn't lose any value. It's just the split adjusted basis basically took effect. But while the price of an individual Amazon share is much lower than it was last week, investors shouldn't be fooled. The stock isn't any cheaper than it was, and the value proposition is the same as it was last week before the split was announced. Essentially, what Amazon did was it created more shares, essentially. So there's basically 20 times more shares on the market. So each share is worth less. Though the stock split itself doesn't really matter, there are a number of great reasons to buy Amazon stock now. Let's look at a few. One, the stock is cheap. Amazon stock isn't cheap because the stock split. It's cheap because it's trading down a third from its peak last fall, and its earnings potential is as strong as ever. So it's basically saying the stock isn't cheap because the price was divided by 20. It's cheap because it's trading about a third or 30, about 30% below its peak from last fall. And the earnings potential is still strong. In investing, it's all about earnings. Earnings is where your dividends come from. Earnings is where the profits come from. Earnings is what gives the company strength and the share price to go up. Earnings is what make people want to flood and buy the stock. Okay, the earnings is very important, and here they're saying that earning potential is as strong as ever. Okay. That said, the company's general accepted accounting principles earnings were marred last quarter by a plunge in the value of Rivian, the electric vehicle maker that Amazon had invested in. So Amazon is in everything, right? They bought Whole Foods, they buy a lot of different things, and Rivian is an electric vehicle car maker that they invested in, and the earnings was low because of Rivian. I guess the value drop. That was purely a paper loss, meaning it wasn't really real, based on based on a mark to market method of accounting, which led the company to post a loss in the first quarter. So they're saying this is more just paper loss based on what's going on with Rivian. Based on 2021 earnings per share, however, Amazon is trading at a price to earnings ratio of just 37.8, about the cheapest it's ever been based on that metric. We did a video on price to earnings. Price to earnings basically a metric where they take the price of the stock over the earnings per share, and it gives you an idea of how to compare one stock to another to see how really cheap it really is, right? Because you may be tempted to say this stock is cheaper than this stock because this is worth $10 and this is worth $20. But you can't really say that that's apples to oranges. The price to earnings ratio is what gives you an idea of really what kind of deal you're getting. Price to earnings ratio between, say, 13 to 19 is considered fair value. Price to earnings ratio, say, less than 10 is considered you're getting like a discount, like, and price to earnings multiple PE ratio above 20 is considered expensive. So even though this is 37, it's saying it's the cheapest it's been. It's cheap as it's been. In May, Amazon actually fell below where it was trading in February 2020 before the pandemic. Right? Because the pandemic affected a lot of different things. In other words, the market seems to think that all the gains the company made in the last 2 years aren't even worth anything. That's a mistake because everybody was stuck in the house and they're all on the computer and ordering stuff and all this stuff, and they're saying that the market is not taking that into account and that it was trading below its pre-pandemic level. And these are all adjusted after the split, right? Because Amazon used to be in the 3,000, so this has all been divided by 20. Number two, the e-commerce business will recover. The first quarter was an ugly one for e-commerce. In Amazon's North American segment, revenue grew just 8%, and the company posted a $1.6 billion operating loss compared to an operating profit of $3.5 billion in the quarter a year ago. The business segment isn't just e-commerce. It includes the high margin advertising business, meaning that North American e-commerce losses were likely even worse than $1.6 billion. They're saying that they believe the e-commerce business will recover. Amazon is facing a number of e-commerce headwinds. Rising fuel prices, as we all already know, have contributed to higher transportation costs, which explains in part why shipping costs rose 14% even as units shipped were flat. And obviously the cost of the fuel is going to cut into the profit. The company also overexpanded capacity during the pandemic and is now subleasing excess space. But it should eventually grow into that capacity. What is saying that Amazon anticipated that they were going to get all these sales and I guess they rented out all these warehouses and they said now they have over basically an excess of space and they are now subleasing that out to other people. But they said eventually they're going to be able to use that because they're saying the e-commerce business will recover. The e-commerce sector in general was also facing difficult comparisons in the first quarter of 2021. The first quarter of 2021 was the last full period before COVID-19 vaccines were available to the public. This was also a time when Americans also got stimulus checks. So e-commerce performance should improve over the year, even though Amazon may continue to lose money this year due to overcapacity. Again, all those extra warehouses. Amazon Web is still a juggernaut. Okay? AWS is basically Amazon Web Services. This is, I guess, their advertising arm. Amazon's biggest profit contributor is also its most reliable, and it shows no signs of slowing down. Amazon Web Services, its cloud infrastructure unit, posted 37% revenue growth in the first quarter to $18.4 billion and currency neutral operating income growth of 53% to $6.5 billion, which basically saying that the Amazon Web Services is killing it basically. And they believe that's going to continue to drive revenue. Now let's look at, let's go back to history. Now let's look at the analyst price target. So a lot of times, if you haven't known or if you don't know, there is analysts, which are basically professionals from different investment banking companies. So like, you have Bank of America, Baird, Barclays, BMO Capital, Citigroup, all these companies, Deutsche Bank, these are all Goldman Sachs. I think some of these names will pop out. JP Morgan. And they work for all these companies, right? Raymond James. And they follow a certain industry, right? The industry they may be following is, or they follow a certain company. So they're following, they're the analysts that follow Amazon. And they do analysis based on, different things, based on earnings, competition, the economy as a whole, and they come up with a price target. It's called analyst price target. So it says here, based on 39 analysts offering recommendations for Amazon in the last 3 months, right? These are all from all these different firms, and they come up with like a consensus. And it says here the consensus is a strong buy. So it's like either hold or sell. They say sell if they believe the price is going to go down. It's going to go down. They'll say buy if they believe the price is going to go up, or neutral, just hold because it's kind of just gonna not do much. So based on all these analysts, 39 of them, following Amazon. Their recommendation is a strong buy. So obviously, they must believe that the price is going to go up. So currently now, we say the price now, it was about $2,500 before the split. After the split, you would divide it by 20, and because it was a 20-1 split, and the price now is about trading now is about $122, right? It says based on analysts offering 12-month price target for Amazon in the last 3 months. So taking all 39 together, all 39 analysts, they all gave their recommendation. That the average price target, take all of them divided by 39, the average price target that they all came up with is $180.13. But obviously with 39 different analysts, you're gonna have a variation, right? Some are gonna come in low, medium, high. So the average, they believe in the next 12 months, it'll get to about $180. The high estimate, they believe it'll get to about, meaning the highest, the person who was, I guess, the most bullish came in with a price target of $212. And the one with the most bearish, means that they were thinking the price is going to be lower, came with a low estimate of $140, right? Which is shown here in this graph. So if the price now that it's trading at about 122, and the average they believe is going to be about 180, that's going to be about from 120 to, it's going to be about maybe $58 though, which is going to recommend maybe about a 40% increase, right? So if you buy it now and it goes up to that in the next 12, that's about a 45% increase. Which would be a pretty good gain. So let's talk about these price targets. Obviously, nobody can predict the future. Things change. We see gas is going up, there's wars, and so on. But it gives you an idea when the consensus is a strong buy. Only the low was 140, but the average is 40% higher than it is now. So even if you didn't buy it before the split, you can still buy it now, and according to the consensus from these 39 analysts, you have about a 45% upside from buying it now. So I'm buying it as much as I can, because obviously I want to get that gain. So guys, just a quick video just to kind of increase that financial IQ so we can break the cycle of generational poverty. If there's people out there you think could benefit, let them know about the MD Investor. Until then, continue to command your money to grow, and I will see you on the next one.